The market for Big Bear AI Holdings Inc., ticker symbol BBAI, is currently closed for the weekend, having ended the last trading session on Friday, November 28, 2025, at a closing price of $6.33 per share, which represented a strong intraday movement of up 5.15% from the previous close. That move alone, a swing of over 5% in a single day, sets the stage for a critical analysis, but the deeper insight lies in what drove that movement. It wasn't just a general AI stock lift, but a direct response to tangible operational progress centered on international expansion and a strategic acquisition that promises to fundamentally re-engineer the company's revenue profile. Specifically, the news around the Memorandum of Understanding with a consortium in Southeast Asia to launch an AI-driven aerospace hub, coupled with the acquisition of the generative AI platform Ask Sage, provides a narrative shift that moves the stock from being a purely government contracting entity to a more diverse and potentially higher-margin software player. This is the unexpected development the retail crowd didn't fully price in, going beyond the simple, better-than-expected revenue beat in the recent earnings report. The common understanding of BBAI, particularly among retail investors who have tracked its volatile history since its SPAC merger, is that it's a high-beta, high-risk play, deeply reliant on multi-year, often delayed U.S. government contracts, primarily within the defense and intelligence sectors. The general expectation is that this contract dependency creates a feast or famine cycle, resulting in erratic financials and significant stock price swings, making it an instrument primarily for short-term traders looking for volatility spikes. The reality, however, is that while the core business remains tied to this segment, the recent maneuvers suggest a deliberate, focused effort to change the composition of its future revenue, which is a key distinction that long-term investors should note. The third-quarter financial results themselves underscored the tension. While revenue of $33.1 million topped consensus expectations, and the company reaffirmed its full-year guidance of $125 million to $140 million, the gross margin actually narrowed. A narrowing margin in a growth-focused business typically raises a red flag, which is why the market's enthusiasm can't be solely attributed to the beat. It's the shift towards potentially high-margin annual recurring revenue, or ARR, through the Ask Sage acquisition and the Southeast Asia partnership that is truly turning heads. Management has projected Ask Sage could boost ARR six-fold, and that's the kind of high-quality growth figure that can justify a premium in the AI space, challenging the old narrative of BBAI as a low-margin government services provider. The recent stock movement is a direct reflection of this shifting sentiment. The move on Friday pushed BBAI significantly higher on solid volume of over 70 million shares, indicating strong conviction behind the buying. The stock has shown remarkable price action in the recent quarter, bouncing off its 52-week lows and displaying significant year-to-date gains that outstrip many peers, even amidst the backdrop of reduced revenue guidance earlier in the year due to federal spending uncertainty. This volatility is a structural feature of the stock, but the current upswing is underpinned by a more strategic rationale. The market is increasingly valuing BBAI on its forward-looking AI platform potential rather than its legacy government contracting services component. This is critical because the valuation, which stands at a price-to-sales multiple around 12, is seen as cheap compared to some other prominent AI players with larger commercial footprints, a fact often debated across investment forums like Reddit's r/stocks. The bull case here is betting that BBAI successfully pivots its technology, which is proven in mission-critical, highly secure government environments, into more scalable, higher-margin commercial and international markets. Let's now address the short-selling awareness aspect, which is indispensable for any stock with this level of volatility. BigBear.ai has consistently been under short-seller pressure, and the current dynamic is no exception. Recent data shows short interest remains substantially high, with a percentage of float sold short near 28 to 24% depending on the source, and a short interest of approximately 79 million shares as of the most recent settlement date. The days to cover figure hovers around 0.72 to 1.19 days, which is relatively low and suggests that a short squeeze would require an extremely aggressive multi-day surge in buying volume to truly trigger a panic among short sellers. However, the high short float percentage is the real actionable insight. This indicates a significant contingent of the market maintains a deeply bearish view, believing the current valuation is unsustainable, especially given the company's continuing negative earnings and the substantial accumulated deficit, with TTM losses still in the hundreds of millions. These bearish institutions likely focus on the reduced gross margin, the ongoing cash burn, and the historical reliance on government contracts, which are notoriously lumpy and unpredictable. They see the recent rise as a temporary, hype-driven spike in an otherwise fundamentally unprofitable business. Retail investors should approach this with a clear understanding of the risks. First, know where to find the data. Official short interest is released twice a month, but real-time estimates of the borrow rate and short availability, which can spike dramatically before a short squeeze, are available through specialized financial platforms. A rising borrow rate, even more than the short interest percentage itself, is a direct signal of increased short demand and potential cost pressure on the short sellers. For BBAI, the borrow rate has historically been low, which suggests shorting is not prohibitively expensive, dampening the immediate risk of an explosive short squeeze. The key action here is to monitor the daily volume carefully. If the volume begins to trend consistently above the 30-day average, which is currently around 90 million shares, while the price moves up, it suggests short covering could be in play. The key is to distinguish between organic buying driven by the strategic news and technical covering driven by a rising stock price. Chasing a short squeeze based on online chatter without confirming high borrow costs and rising volume is a risky proposition. And it's important to remember that large short positions are often held by sophisticated firms like Citadel, which have the resources to hedge their positions and manage risk far better than the average retail investor. The core business model of BigBear.ai is focused on providing decision intelligence solutions using artificial intelligence and machine learning. Its work is characterized by sense, see, predict, and act capabilities, primarily delivered through its two operating segments, government and commercial. The government segment, the historical bread and butter, serves U.S. defense and intelligence agencies with sophisticated analytical tools for complex assessments, logistics, and planning. The commercial segment is newer and targets supply chain, logistics, and manufacturing clients, attempting to replicate the success of its government-grade technology in the enterprise world. Past performance has been mixed, with revenue growth stalling in 2024 and significant net losses persisting, which is the main point of contention for value-focused investors. For instance, the net income was negative $295.55 million in 2024, which is a stark figure that the short sellers are certainly highlighting. However, the acquisition of Ask Sage changes the trajectory, aiming to inject a pure-play, high-margin, sticky software product into this mix, specifically tailored for regulated industries like government, defense, and finance. This shift from custom services contracts to scalable software licenses is what the market is getting excited about. Looking ahead, the future outlook for BBAI hinges entirely on the successful execution of this commercial and international pivot. The announced partnership for the Southeast Asian Aerospace Hub is an early proof point of the company's ability to win international, large-scale, non-U.S. government business. The acquisition of Ask Sage, which is expected to integrate generative AI capabilities into its existing platform, is a clear catalyst that could increase the company's ability to generate recurring, software-derived revenue. Potential scenarios include BBAI becoming a leading niche player in highly regulated AI deployments, eventually being acquired by a larger defense contractor like Litodon, or a major tech player looking for government access and certified AI technology. The risk, of course, is that the integration of